Welcome to my podcast on the topic of IRS tax debt relief options. I am a CPA, a Circular 230 professional, entitled to represent taxpayers in any of the 50 states in representation matters before the IRS, inclusive of tax notice letters, audits, appeals, statutory notices of deficiency, et al. Now, over 10 million notices a year are issued by the IRS. At least 50% of them are just outright wrong. 250,000 taxpayers a year decide to pursue offers in compromise, and 25,000 taxpayers a year proceed to U.S. tax court. Now, 99.2% of them don't make it. Their case is either settled or dismissed before it reaches the court. That's why pro se representation, representing yourself with a measure of professional assistance, such as a CPA, to prepare exhibits, handle analysis of complex issues, recommend strategies, write memos of facts, explanations of case history, and so forth, is a valuable combination of strategies. I have a background in forensic auditing. I'm a researcher and a writer. I've written several books, one book on Amazon called the IRS Tax Debt Survival Guide. It's a practical, plain English roadmap. My firm's name is Tax Options LLC. It's a Wyoming LLC. I live in Florida and have for more than 10 years, but that's just for corporate ease. You can enter the keyword Tax Options LLC on Google or Bing, and my site will come up right away. I also, of course, have a YouTube channel with a variety of videos. At the end of this presentation, I normally provide my email address, but here it is. My name, jtgreneau@aol.com. That's JTGREN, like November, OUGH at AOL.com. I'm a CPA in the Midwest. So, the bottom line rule with the IRS, they don't operate by Marquis of Queensberry rules. As my father used to say, between us girls, you know what that means. So let's get into it. Leveraging a professional CPA's expertise allows you to present accurate, compelling financial evidence, which will increase your chance of success and keep costs manageable when you go before IRS appeals or a collection due process hearing. And we'll discuss OIC, offers in compromise, at least a few points about them at the end as well. So keep in mind, even after receiving IRS notices, taxpayers have administrative avenues to challenge or resolve. Two of the most important tools are the IRS Office of Appeals and, secondly, collection due process CDP hearings. Understanding how these work can stop collection actions, preserve your rights, and sometimes resolve disputes without having to appeal to tax court. The IRS Office of Appeals, what it is, it's a separate, independent branch of the IRS. It is designed, at least, to resolve disputes fairly and impartially, and it focuses on settlement and compromise, not collection. Now, appeals can be used if you disagree with an audit assessment, if you've received a notice of deficiency, if you have a collection action in progress, such as a levy, lien, or seizure, or, of course, if you're seeking offer and compromise acceptance. Basically, you have to request an appeals conference, typically in writing or using a special form 9423 for collection appeals. You have to submit documentation, financial statements, calculations, evidence supporting your position. Exhibits prepared by a CPA are very effective here. Then you have to negotiate and settle. Appeals officers do attempt to resolve disputes without litigation. Settlement options may include partial payment, abatement of penalties, or offer and compromise adjustments. And then finally, there is a decision after many months. The appeals officer issues a determination letter which may accept or reject your arguments. Collection due process hearings. Let's cover these briefly, what these are. A CDP hearing is a right triggered when the IRS proposes a levy or lien. It's governed by several Internal Revenue Code sections. It must be requested within 30 days of the notice of intent to levy or lien, and it allows taxpayers to challenge the proposed collection action before enforcement starts. Independent appeals officers handle CDP hearings. They review whether proper notices were issued, the taxpayer's proposed resolution, which might be an installment agreement, an offer in compromise, or whatever, and any valid challenges to the tax liability. The steps in a CDP hearing. 1, you've got to request the hearing. You've got to respond in writing within the 30-day window. You have to submit documentation, inclusive of financial information, proposed exhibits, proposed resolution. A CPA, of course, can prepare financial exhibits and calculations. You have to participate in the hearing, or your CPA can, of course, represent you. It can be in person, by phone, or by correspondence. Appeals officers listen to arguments and review evidence. And then eventually you receive a determination. The IRS issues a written CDP determination, and if you don't like it, you may appeal it to tax court within 30 days. A very strict 30-day time limit. So even in administrative proceedings, professional financial expertise is invaluable to prepare exhibits and summaries, clear spreadsheets, reconciliations, and charts for the appeal officer, to verify calculations, ensure all income, expenses, assets, and deductions are properly reported, assist with documentation, ledgers, contracts, invoices, and other proof, and provide expert opinions. So the strategic use of appeals and CDP, you can stop aggressive collection. You can prepare for appeals or tax court. You can negotiate before filing an OIC, an offer in compromise. And this all goes towards documenting your position. Mistakes to avoid. You don't want to miss the 30-day CDP window. You don't want to submit irrelevant or disorganized or incomplete information. You want to include all relevant IRS correspondence. And don't assume verbal arguments are sufficient. They are not. Documentation is critical. In practice, taxpayers often combine strategies. A pro se tax court petition plus CPA prepared exhibits, that defends liability. A CDP hearing plus CPA support, that suspends collection while evaluating an offer in compromise or an installment agreement. Or a hybrid strategy. Administrative avenues, in other words, can save time, money, and enforcement headaches when properly documented and timed. So IRS appeals and CDP hearings, to summarize, are formal opportunities to contest or negotiate. Deadlines matter. 30 and 90-day windows must be respected. Administrative resolution can stop collection, reduce penalties, and strengthen your case. Acting strategically and documenting carefully is often the difference between paying in full and achieving a realistic solution. To talk briefly about offers in compromise, keep this in mind. The IRS uses national standards as part of its collection financial standards when evaluating an OIC to determine what living expenses you're allowed to deduct before calculating how much you can pay towards your tax debt. Now, national standards are fixed nationwide amounts the IRS allows for basic expense categories. These amounts are based on data from the Bureau of Labor Statistics Consumer Expenditure Survey. Now, these are standards you don't have to document actual spending on. You have to document actual spending on everything else, all the other categories, but not these. The IRS accepts the national standards in this particular case as reasonable for the category, and these categories include food, groceries, housekeeping supplies, apparel, personal care products, and discretionary and basic incidentals. There are also some national standards for out-of-pocket health care expenses, and it depends on how many people are in your household and so forth. And these numbers are always updated periodically, so always check the IRS website for the latest version. Now, when calculating your reasonable collection potential, RCP, that's the number, in an offer and compromise situation, that's the amount the IRS thinks it can collect from you. You always start with your monthly income and you subtract allowable living expenses based on one, national standards for basic household categories, but local standards for housing, local standards for utilities and transportation. This varies by location. And then actual documented expenses that meet IRS criteria. The result is your disposable income, which the IRS uses to calculate how much they can expect you to pay in an offer. Okay, so that covers today. Please check out my website, Tax Options LLC. Contact me at jtgreneau@aol.com. That's jtgreneau GRENOUGH at AOL.com. My telephone number is area code 727-403-9559. Have a good day.